So at the start of this year, I put it out there that I was essentially not planning to accumulate anything.
Yeah, vulture.
Yeah.
Cash stacking.
I was
Yes.
cash stacking, consolidating, investing in the existing portfolio. So that was my thesis. And we've done a heap of that as well. We've done renovations on property.
Kitchens and stuff, right?
Kitchen upgrades, bathroom upgrades.
Yep.
Bianca, my lovely wife, has done an excellent job of managing those as well. It's something she's decided she wants to take on board. So very much with her taking the lead, which I'm so proud of her on this as well,
Shut up.
has put in massive efforts to maximize every property in the portfolio, from renovations, doing things to get rents up, refinancing to make sure we have the right product for profitability for us with there. And it's made a huge difference. So the combination work on that has been massive. My role, in all honesty, has been to focus on earning well to fund these renovations out of cash instead of needing to borrow.
Extract money.
Yeah. So we've done that, which for those who can, I would highly recommend.
I've seen the returns that you can get. Yes.
It's
we did a reno on a lower story of one of our places with like kitchenettes and bathrooms, and it had a bathroom and bedroom and lounge room. And I 100% recommend it. And we did it out of cash as well. And like the rent increased $120 a week or something. Like the numbers just stacked up. It was like a 2-year payback period or something. So it is a great strategy.
I would make the statement that, let's say rents went up 10% in the year on their own, which they probably went up more, but let's just pretend they did. With the renovations we've done, I would say it's probably gone up closer to 15 for us. And the combination of doing that out of cash and not debt, and injected it into the portfolio, has meant that interest rates have not hit us like other people.
I'd be interested to also see the caliber of tenant that you get on the newer places as well, because they're going to start being priced more.
They are nicer.
Yeah. And so, yeah. And you're saying that you've changed it though. So you're no longer doing them?
Well, let's go deeper than this. You and I are of the view, and I will speak for you often on this podcast, that inflation and purchasing power is real.
Completely.
So if you've got money sitting in a bank account, if you've got $1 million sitting in a bank account, it's being eroded at potentially 5 to 10% a year, depending on your personal inflation rate and what inflation is doing.
Yep.
So we did a bit of revaluing, did a bit of looking at the portfolio after the works we've done, and like my LVR got to 44%.
It's outrageous.
It is outrageous.
This is a property investing podcast. What are you talking? 44%?
Yeah, so we owned 56% of our properties, and we owned more than the bank.
Yep.
And to be honest, I was like, this is amazing. We're in a really low risk position. We've got good cash buffers. Rents are here. Like, this is great. And it hit me that I had potentially consolidated to a point where we needed to expand again.
Yep.
Because if I fast forwarded, so I'm looking at now, I'm roughly on, I don't have to be roughly here, I'm 34 right now, is that if I just keep paying the debt off on this, I'm actually going to kind of underhit where I could get to from here.
Totally. Because you get the stagnant.
On the idea that I'm going to live to 100, which I hope I do, we are consolidating too much now and potentially missing out on a lot of opportunity and dealing with a lot of inflation and my beliefs around the property market in general. So it really kind of hit me that if, don't get me wrong, and this is the part of the podcast where I try not to come across as a rich asshole with,
Yeah, sometimes it still comes.
A little bit.
Still comes through.
More from the sharing of point of view is like, if you just bought one investment property and paid it off, right, that's your strategy. By the time you paid it off, you've missed all the opportunity. Well, if you didn't pay them all down so quickly, you maybe could have bought 3 or 4.
Yep.
And then you would have a much bigger footprint, and you can let inflation and rent rises and all that do the work.
Yep.
So I went and looked at this and said, for me, I'm definitely being too conservative now. This is not appropriate. I was going to potentially wait this year, be opportunistic, started digging into the property market and found some juicy opportunities.
Absolute bloody bangers. That's the most Australian saying I could say.
I like it.
That were not even just juicy. It was the easiest yes on the face of the planet.
So we're very fortunate to have a lot of great relationships with people in property.
Yep.
So what kind of occurred for me? So I've had this moment where I've gone, we're in a very strong position, strong cash buffers, earning is going well. I literally have I probably had 2 deposits sitting in a bank account just in offsets.
Yep.
I'm sitting here and I'm going, I'm absolutely poised to strike. Went out to our buyer's agent and spoke to some of the team at Dashdot as well, which is our buyer's agent anyway, but Jason and Nick, which are amazing. Spoke to other people in the network to see what they're doing and what they're getting up to. And with my views on where it's all going, I was like, there are, as I said, some banger opportunities.
Yeah.
So we put the order in.
One?
So to this point, we have acquired one property this year.
In the next 48 hours?
Maybe a second.
All right, what's the goal? What are we going to round out the year on?
I would like.
A goal?
Yeah, that's a really good question. So I'm in this current environment with what's going on, I don't see amazing opportunities for cash flow like I once did.
Yep.
Okay, so buying unit blocks with a 10% yield, I can't find them right now.
Don't exist.
Maybe there's other opportunities out there that I'm not aware of, but when I look at the deals I was previously able to get, if I was to go for a cash flow play like that, not there as I would like. Growth opportunities, on the other hand, things that need work, some amazing opportunities out there.
There is some serious abundance, especially I think it's been with the compression of a property potentially going from positively geared to be negatively geared, to be very explicit. A lot of people are avoiding these growth plays because they
need the cash flow,
but that's the challenge, because especially as the the lending criteria has shrunk, people can borrow less. Like they almost are avoiding these things like the plague, which has just sprouted so many of these great growth opportunities, whether it's manufactured or just a great location.
How I've done well in property is basically when everyone's going one way, I go a little bit the other way.
Yeah.
So when pandemic happened, people stopped buying, I went hard.
Yeah.
When people were more into Sydney and Melbourne, I was investing hard in like Queensland at the time. And I had very fortunate opportunity to have people around me that could help me spot these opportunities. The one we've just acquired just to fill people in on the deal is actually a subdivision project. So a splitter, talk the development lingo now.
You are a developer.
So this is 900 square meters block with an existing house on it that's positioned to one side.
Yep.
The block can be cut in half and then a second dwelling can be built on that. So there's ability to fit a 4-bedroom house on the property. And they already had some plans for it. They've already someone had already started exploring doing the work on this. And I'll dig into it a little bit more. The property as is today has a 5.9% yield.
I'm outraged.
It's not bad for cash flow.
If I wasn't doing my PPR, this is literally the property that probably would have landed on my lap.
So we actually, that's probably true. That's actually true. You would have got this one.
I'm eating some humble pie right now. This is awesome, man. I'm so good.
Right. So 5.9%, interest rate's about 6.5. Say it's going to get up to 7%. What we've done is we've left a chunky enough deposit where this thing is cash flow neutral.
It's just washing its own face.
Completely. So that's acquired. It's in a growth location. Like the aim is growth. So we're leaving this thing to grow, and then we will tackle the subdivision and development. And then and this is what I like about these types of deals at this stage of the property. If we want to, we can just subdivide it and sell the block of land. We don't have to build.
It creates so much optionality. And I think this is interesting because the property basically washes its own face with a healthy deposit, which means that it pays for all of its outgoings with its rental income. But it's also got an engineered growth play on the back of it. Plus, it's also in a great suburb that's going to grow anyway without you doing any engineering of anything.
All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.